Hey everyone, this is Frank with Pivot Boss, and in this premium educational video, what I wanted to do is show you how to confirm when price is breaking through a well-defined support level. And today the ES demonstrated a very clean and clear violation here that was easily seen in the footprint, and I wanted to show that so that you can have it for future use. So taking a look here at the overall market, first of all, 1975 was a big level. We've been talking about the inability for price to gain it or establish acceptance above 75, and each time we've seen selling. And each time it would come down here to about 1960, and this is where we were seeing strength and a push higher. Then popped back down toward 1960 again, and we saw a minor bounce. But then right here is where I'm talking about. Right there is where I was able to tell our guys that the market right there was seeing aggressive buyers enter the footprint, but those buyers were not getting price to go bid. Instead, they were being absorbed by larger sellers that were using limit orders. And then you started to see the sell stops come out and price subsequently dropped. But throughout the entire downtrend here toward 1950 and 1949, we saw absorption of aggressive buyers in the footprint the entire way, really paving the way for a steady and an easy decline into 1949. Overall, a solid 11-point breakout move. Now, taking a look at the footprint, we can jump into this a little better now. So we're going to zoom in on 1950 on that break point. What you'll see is, bringing up the footprint, you can see that 1960 right here, basically right in this zone. This is 1960, the key level. You can see I had it marked as a key level today. Price drops into this zone, bounces a little bit, comes back, bounces, and then what you begin to see is buyers enter the market. So if I slide price over a little bit, right here, this is important. These are buyers that come in and price rotates lower. Sell imbalances show up, price pushes higher, and then more buyers come in and price auctions lower. And then right here at 1961 quarter and 1961 half is where we see aggressive buyers enter the footprint. So far we had two camps here of aggressive buyers that were not able to get price to go bid. Instead, price offered and went lower. And right here on 1961 quarter, 61 half is when I told my guys, listen, buyers are being absorbed, and if they don't get paid, they're going to run for the exits. Their stops will be hit. What does that mean? Well, when you're looking at a support level and you're looking at the footprint, these aggressive buyers like these guys and these guys and these guys, this is showing the delta, right? It's showing the difference between the amount of contracts coming in at the bid versus the ask. So these are buyers that are aggressive, meaning they're hitting market orders to buy. So they're hitting the ask, and they're trying to get price to go bid higher. But when price doesn't go up, that means that larger sellers, responsive sellers using limit orders, are absorbing that demand at a bigger clip and are pushing price lower. So when I'm looking at a support level to buy it, what I'm looking for is any type of trapped aggressive sellers, because trapped sellers are the buyers or become the buyers that get price to go higher. In this case, when you have buyers coming into the footprint at a support level, these buyers still need help to get price to go up. And if price does not go higher, these buyers become the sellers that get their stops run. And that's what you begin to see right here. When the stops start coming out, you see the sell imbalances come in and price rotates lower. So as I advance the slide forward here, or the chart forward, you'll see right here is when the stops start to come out. Look at the big sell imbalance that comes in right here below 1960. But look at all the buyers that come in on 1960. All of those buyers became absorbed, and then the stops started to come out here. Because if you bought here at 1960, you bought here, maybe you bought here, where's your stop? Where's everyone's stop? Everyone's stop is below the low. And that's when the first big batch of stops start getting hit at 59 quarter, and then all the stops come out. Not only that, but you see additional buyers come in right here. You see buyers come in here. And again, those buyers are not able to influence price higher. So if those buyers get trapped in their positions, their stops are then run. They are forced to liquidate their trades, the stops are run, and the downside sell stops trigger more decline ahead. And you can see overall this thing just dropped and dropped and dropped until we reached the low of 1949 just before the close. Now one thing to keep in mind here is when you're looking at this, look at this downtrend right here. Okay, that's the downtrend after we broke the 1960 level. We get all the way down to 1949. That's an 11-point move straight away. The thing to keep in mind is every pullback saw buyers enter on those pullbacks. Again, those buyers become the fuel that push this thing down because it is their sell stops that are being triggered. Because once these buyers come in, price isn't pushing higher. Instead, they're becoming trapped in their positions. Aggressive buyers that become trapped are forced to liquidate, and then it's their sell stops that come out. And then we got the nice continuation lower. So what I wanted to make clear here was the fact that when you're looking at a support level, to buy it or sell it, look at the footprint, look at where the aggressive buyers or sellers are coming in, and look to see how price responds or reacts to that. We had buyers coming in on support, and I'm not typically one to jump into a trade long if buyers are coming in on the footprint and price is not going up. That tells me right there they're being absorbed. And when that absorption occurred, it was an easy tell that price was about to drop. That's it for now. Let me know what you think.